All right, looks like we are live. How's everybody doing? My name is Jake Anderson. I'm with Property Guide of Virginia. I am joined today with Desiri Walker with Commonwealth Catholic Charities, and we're going to have a conversation around credit counseling and credit repair. And for folks out there who are looking to step into home ownership, but maybe they feel like the credit isn't where it should be. This is going to be a good conversation for you because we're going to kind of really dive deep into this topic with Desiree to talk more about the process of improving your credit, but also like what are options that are available to you, even certain situations you might be in, and just really bring that education to you for credit counseling. So with that said, Desiree, thank you for joining me today. If you don't mind, just give us a little bit of an introduction for yourself and tell us about what you do with Commonwealth Catholic Charities.
Thank you, Jake, for having me on today. And again, my name is Desiri Walker, and I have been a housing and financial counselor with Commonwealth Catholic Charities for the past 6.5 years. And prior to that, my whole life was spent in banking, mostly in mortgage and lending. So that's what I've done all my life and transitioned over to the nonprofit side. And I really love doing the housing and financial counseling, helping people get their credit where it needs to be, help them with their budget, and prepare to purchase a home, prepared to be mortgage ready.
That's awesome. Tell me a little bit about, I guess, like when people come to you, are they coming to you because there is a need initially to repair the credit, or is it more from the stance of I want to get into home ownership and I need some support on the finances of it, or maybe it's a mix of both?
And it's definitely a combination of those. Most of our clients initially they really want to buy a home. They're usually first time home buyers in most cases. In fact, just about all of my cases are first time home buyers, but they don't know how to get started. They have no idea what to do. They have work to do on their credit. They need help with saving, getting ready financially to be able to, number one, not only apply and get approved for a mortgage, but also to be a successful homeowner and be able to manage the costs that come with home ownership successfully, because they're not really doing that quite well enough now. So they need to build those skills in preparation for becoming a homeowner.
Yeah, there's definitely a lot more than what meets the eye with home ownership in terms of cost and responsibility. And
Yep.
I think when you're a renter, and anytime there's a problem, you call the landlord,
Yep.
and you're not privy to taxes, insurance, and mortgage, and all the things that kind of come along with that responsibility. So that's awesome that you really take that step to give them the preparation and readiness that's needed to really step into really one of the biggest financial commitments and investments that they're probably going to make in their life, which is buying a home. So um, let's shift into talking about the credit counseling piece because um, I remember before you and I got connected, I was actually Dale Fader who was the one who connected us, and I was asking Dale, I was like, give me some. I need to know who's like a good contact for anybody that can support with credit repair, and he had mentioned your name, and it seems like you work a bit differently than like there's companies out there that's like credit repair services, and there's credit repair services. Tell me a little bit about like the process that you take people through for credit counseling and how you help them get their credit to a place where it's ready for a mortgage, and maybe speak to some of the differences in how you operate.
There's a big difference between credit repair and credit counseling. And when we start working with people, we let them know credit is not the only thing we're going to be talking about. We're going to look at their whole picture. We're going to look at their budget, their monthly income and expenses. In addition to, of course, the credit is always a big focal point of the conversation. Um, but we're looking at the whole picture, not just zeroed in on fixing credit. And we don't fix credit. There's no way to permanently fix credit. And credit repair companies will charge money to do steps that can be done free of charge. You just need to do a little legwork, make a few phone calls, and you can do it all free with long-term results that will not come back and bite you later. And the way a credit repair company works is they'll just go through and dispute negative items,
Hmm.
and that will temporarily boost the credit score while those items are in dispute. But if it's legitimately the account of the client, then eventually the creditor will confirm that the account is legitimate, and then it goes right back on the credit report. So it's a big waste of money. It might be a short-term fix to get that credit score boosted up, but it won't be a long-term solution, and it's a waste of money, waste of time too, that the client
Yeah.
could be working on doing actual real concrete steps to get it fixed. So we guide
So
them through that.
that's awesome. I didn't realize that in the credit space. And one question I have for you is, um, I would imagine that if the actual account holder is reaching out directly to kind of work through those disputes, and of course they have you by their side to help provide guidance. Um, I would, and maybe I'm wrong in this thinking. I'd love to hear your thoughts on it, but I would imagine that the resolution that comes from that effort is going to be more permanent and I guess established because they're speaking directly with the account holder. They've come to an agreement, and versus where if a credit repair company reaches out, it's just like, hey, you need to remove this, and then it goes into some, I guess, investigation temporarily, and it's kind of in a holding place where the route that you're talking about, you're able to get closure much faster, and not necessarily faster, but more. Um, it's more of an established closure with that particular account holder.
Yeah, that's basically right. The credit repair companies, they'll just dispute at the credit report level. They won't call the creditors. They'll just dispute the accounts, and that wastes
Okay.
time because eventually it's coming back on the credit, and that's time that the client could be spent going directly to the creditor, like you mentioned, and trying to resolve it, settle it, and get it permanently resolved so that it's not coming back later.
I want to ask you about just certain situations where folks have things on their credit that they are trying to get removed. And I know there was a situation with a friend of mine, and obviously I won't reveal their information, um, but there was a like situation where there's a spouse that they had made some kind of a financial arrangement with. Maybe they co-signed for a car, or they did something to support them financially, and then that spouse didn't fulfill on their end and ends up messing up their credit. So now they've broken up, and they're trying to fix the damage that was done to their credit. And that's just like one situation. I'm sure there's other situations where things get a little bit messy. And I'm curious to know, like, when you're speaking to an account holder, or there's, I guess, something like that probably has to go through some form of litigation to really get resolved potentially. I don't know, but I'm just curious. Some of the more complicated situations that you might run into with folks that are, probably from their understanding, it's like, this is not my fault, but they feel like it's not their fault, but this is a situation that happened that's now resulted in credit that's affected my credit. What can I do? What are my options? Are there any options for me? And how could that look?
I hear that a lot, that the client feels like what happened wasn't their fault, especially when we're dealing with medical collections. This insurance was supposed to pay that, or
Hmm.
that is a lot of times why things go to collections. The person doesn't want to pay it, or in the case of your friend, um, when you co-sign with somebody or are a joint applicant, you are both responsible. And like, even if you go to court, and I want to back in my banking days, I would have lawyers come in and say, you need to remove this debt off this person's credit report with Virginia Credit Union, where I used to work, because they got divorced, and my client's not responsible through the divorce agreement. And I said, we have to say, doesn't matter if you have an agreement in court, they have to work out a way to resolve it. And I guess through the court system, ideally, the person who is responsible for the debt is supposed to, per the agreement, be paying on it then. But if they don't keep up their end of the agreement, or like in your friends, they break up and then the person stops paying, then you're left with a big mess, because the creditors are under no obligation to, and they don't. They won't remove a negative history or take you off the loan. You have to resolve it with that person, unfortunately. So it is very difficult. And in cases where you feel like, in a collection situation, it's not their fault, creditor doesn't care whose fault it is. You can try to dispute it if there is, something that went wrong with the business transaction, and try to resolve it that way. But it gets very difficult, and honestly, there's not any easy answer to that. I tell clients that you need to just try to suck it up and work out an agreement or a settlement maybe with the creditor, and move on with your life, because it's going to be very difficult to get that debt off your credit, unfortunately.
I guess unless if it's like legitimate fraud where somebody stole your identity and then opened up accounts under your name, I guess that would be the only case where there can be you could actually fight that and get it removed. But in these situations where you have participated in the agreement to take out that debt and it went sideways because of whatever personal things that happened, unfortunately, it's on your shoulder still to kind of work through it. And you pray at that moment that the counterparty to it is going to be reasonable and willing to work with you to find resolution, because and I can see where that maybe your job turns from a counselor to a therapist potentially for a brief period of time.
That happens a lot
when you're working through that kind of situation, I'm sure. Okay, well that kind of speaks to there's problems on the credit. What's the optionality? And if there's a legitimate fraud, obviously you can fight that. If you've committed to it, then it's there, and there's not some magic wand you can wave to get that removed. It's so that kind of leads to the next question. It's okay, let's just keep our eyes forward here. What can we do moving forward to get on a path where we can really start improving our credit? We know that there's some damage that's been done to the credit. What can we do to moving forward to help improve that? What are some steps that people can take? And then also what are some realistic timelines that people could keep in mind for improving their credit? If they're at a place where it's really bad, there's a lot of judgments against their credit, maybe there's bankruptcy, whatever the case may be. And then what's the realistic timeline for them to improve it to a place where it's at a place where they can consider now a mortgage for a home or what have you?
Yeah. So as far as if you have a mess to deal with and you have collections, well, first of all, let me backtrack. Judgments, that is a whole nother issue. A judgment is a court-ordered debt that has to be paid, that has to be resolved no matter how small it is. It must be resolved, and that judgment has to be released in the eyes of a mortgage lender. So that's a number one thing that has to be dealt with. So if clients have those, we tackle those first. And then with the next step is to deal with any collections that are sitting out there, especially non-medical. And I would recommend going toward the newer ones, because older collections impact your credit less. Sometimes lenders will let you just leave them alone because they're kind of not real significant. So I would work on the fresher problems first, and because they're going to be impacting the credit more heavily, but definitely judgments, then collections. And the best strategy is to try to negotiate settlements with the collection companies who you're usually dealing with. If your debt has gone to a collection company versus with the original lender, then they're going to work with you. They're going to take something less than what you owed because it's kind of a lost cause in the eyes of the lender at that point. They're just trying to get whatever they can. The older the account is, the more likely they are going to give you a good deal. So there's no easy way around it. You're going to have to just pick one at a time, work through it. And another thing that a credit repair, some of the credit resolution companies that charge money will do is, while charging a monthly fee, they'll collect a certain amount of money to put in escrow for you because you need to have that money up front to pay in cash if you settle. They won't do payment plan, of course. They want the money. Like if you settle $1,000 debt for $500, you have to pay $500 that day.
Yeah.
So some of the companies that are out there will charge you to hold your money for you. So that's a terrible, terrible thing because that's something you need. I work with the clients to do free of charge. You put the money aside. Let's pick one we want to work on. How much can you commit to putting aside, and do not touch it? and then work through it one at a time. Don't let it be overwhelming. And then as far as the timeline, that's just going to vary depending on how bad the situation is, how much is out there. It just takes time. And let's say my client does clean everything up, get everything off. Then the question is, well, how long do I wait now? And by then, when you pay off a collection, it can actually make your credit score dip for a short period of time because you're refreshing an old account that was inactive. But in the long run, it will recover. And I usually tell people, give it 6 months and start rebuilding some good credit. And that should that's usually a good barometer to go by.
Yeah, 6 months is when they start to kind of recognize the improvements that you've made.
Give everything a chance to hit the credit, let some time go by, establish some good credit along the way, and then that's usually a good horizon.
Do you know if there's, I know there's a lot of like, I'm trying to think of how to explain this. There's certain things that people will do in terms of, they'll apply for a loan or apply for a mortgage, and they may be just kind of shopping around. They say, well, don't do that because that's going to hurt your credit. Or, having a credit card, I guess like some of the perception that's out there around credit and like what impacts your FICO score, whether it be good or bad, that you're aware of. And you can kind of answer this in a couple ways. Like one way you can answer this is, here's some good, healthy practices that you can do to always maintain and improve your credit over time. And then here are some kind of like, I guess, warning signs or some red flags. Like just beware that when you do this, whether the intention is, even if the intention is for good faith, like I'm shopping around for loans, just understand that this can have a negative impact to your credit. And if it has a negative impact, maybe how significant of an impact is that on your credit?
Well, you mentioned getting new loans. So when I tell people who are trying to buy a house, try not to get anything new. Like don't get a new car. Try to avoid opening new credit unless you need to build some. So yeah, try not to take out anything new. But if you have to get a new car, your car dies, or you're getting ready to apply for a mortgage, you can shop around for the best rate and get multiple applications within a usually 2-week window. So there is a big misconception around inquiries. So for big purchases, big transactions, you do have a time period where one it counts as one inquiry for multiple lenders. So that's a
Oh,
big misconception. Um, Another big fallacy with clients is they won't have any credit going because they feel like it's bad to have debt, which is it's a good way to think. But for a mortgage, you have to have some credit history established. So I have a lot of clients that need to build up their credit, and one of the best ways to build up credit is a credit card. And it sounds counterintuitive, and people always say, "Well, why would I need to go into debt to build my credit?" But you don't need to. The credit card can be work wonders as long as it's used correctly. Once you get a credit card to build credit, you just use a small portion of your credit, no more than 30% of your limit. Pay it off when you get your statement in full. You're not paying any interest, and that's going to generate account activity that will build your credit up. As long as you're not going anywhere near your credit limit, that's one of the best ways to get your credit going and get it built up. And it has a fast impact on your score when you can maintain a credit card well. And you do not have to go into debt for it. That's the thing. People think they have to rack up a balance and pay on it. Just pay it off at the end of the month. You're not paying interest.
yeah. One thing that, as you're speaking to it, that just kind of came to mind as an idea is like, oftentimes like we all have some form of like recurring payment, whether it be for, a gym membership or your
Yeah.
Netflix or anything like, if you really want to be conservative about it, I would say just take whatever your automatic payments are that's hitting
Yeah.
your bank account and just let them go to your credit card, and then your credit card bill is the bill for all your subscription stuff.
Yeah.
So then you can see all your subscriptions in one place, and it's a way to, because I think where people might get themselves excuse me, could get themselves in trouble with the credit card is that is like the behavior where like the credit card becomes the crutch for when times get hard.
Yep.
Like, we'll just throw it on the credit card, and then
Yep.
that's when next thing you know, you have a rack of debt that's piled up that you now have to deal with. So it's like you're deferring it's like a way of like deferring the pain of having to save or cut back. But if you just keep it as like, hey, these are payments I already have to make, and it's small, and it's a way to keep that active, so you're building credit. Just wanted to share that because I had never really thought about, there's that credit card discussion of like, well, credit cards are, it's bad debt and it's like really high interest rates. So why would I do that? But it's like, it is a form of building your credit, and there are responsible ways that you can use them
Mhm.
to the, plus, a lot of them give you points and
Exactly.
so it's kind of like you get free money if you use it responsibly.
You're exactly right. And some people, including myself, I don't tell people necessarily to do this if they're trying to work on their credit, but if you can really do a lot with a credit card, it's a lot easier and you have more protection if you use a credit card instead of your debit card and pay it off
That's
at the end of the
true.
month. It's convenient. You don't have to worry about overdrawing, and you get, like you said, there are a lot of credit cards out there that will give you cash back and points.
The protection's a big one. That's enough. And I feel like everybody at some point in their adult years will have your credit card or your debit card hacked
Mm-hmm.
and used for fraudulent transactions. And with a credit card, you get so much more protection. And
Yep.
because anytime I'm 42, and I can think of at least 10 times in my life, that I've had to call the credit card company because there was fraudulent charges on my card, and they had to stop that account, send me a new card, and then they refunded me my money, and then went after and investigated, the fraudsters that caused the loss. And I remember when I had my debit card and that happened, it was a huge painful process that I had to
Yes.
go through to be able to recover my money. I eventually got my money back, but it was not an easy process. And I think some banks won't even protect you, in those situations.
Yeah, I mean, it's possible, but like you said, it usually will, but it's not, it's painful.
It is.
And that's your checking account. You don't want your checking account frozen
Mhm.
or money taken out and you have to wait to get it back. That's a mess.
Yeah, yeah, exactly. Is there anything else, is there anything else you feel like we should cover before we wrap up here, just around credit counseling and things that people should keep in mind as they're going through that process?
Yeah, so I'll just wrap up with um, credit counseling with an approved HUD housing counseling agency like ours, Catholic Charities, is a free service. Um, it is to help people become homeowners, and it's provided by our government to give the people the resources that they need to make responsible choices and not just be able to buy a house, get into a house, but like I mentioned at the beginning, it's designed to help people learn how to become good homeowners
Mhm.
and to be responsible homeowners and stay homeowners and not go into foreclosure, not just to get in. And it is, a service that's free of charge to the client. So why not take advantage of it?
Yeah, absolutely. Especially that you take such a holistic approach to it, and it's not just about the credit, but it's about the preparation and ensuring that you're gonna have success as a homeowner. So I love that. That's so awesome that and I feel grateful that I'm able to have this conversation with you to help other people understand that these are services that are available to them. And I think there's a lot of people out there who are considering home ownership, and there's just questions that they need, and they need some guidance, and you're certainly a resource that they can go to be able to get to get the things that they need and the understanding and education they need to make the best decisions for themselves and their families. So um, how can people reach out and get connected with you to get started in this process?
The most streamlined way is to go to our website,
Okay.
and at the top, and our website is CCCOFVA, so CCC of Virginia VA.org. And at the top, there's a Get Help tab, and then you go to Financial Resources, and that's the best way. Or I have, if a lender, so we work with a lot of lenders, they'll reach out to me directly. If you know of anybody, you can reach out to me directly as well. But going to our website will get them started because the full application is there, and then we'll be sure to get one of our counselors in touch.
Okay, perfect. Well, I'll make sure to link that in our show notes in the article that we will repurpose this to an article for the website. So I'll make sure to put those links in there for folks that are looking for that support. So, okay, well, that wraps us up here. Desiree, thank you so much again for your time. I
Thank you,
appreciate
Jake.
all the knowledge that you were able to bring forth to the conversation and helping people figure out credit counseling and understand how they can move forward in that process with you. So thank you so much.
Thank you, and thank you for having me today. I really appreciate it.
Absolutely. All right.